Again, we are going. This time we are going to see or to learn about investment. Yes. Again, my name is Anthony Muhomuza. So we are going to be learning about investment. Yes. Uh, Thank you for tuning in. Today, uh, as the introduction went, my name is Anthony Momuza. That's my name. I've done courses in finance, I've investment. I'm an author. I've written a book called The Way Within. It's in these stores below: Apple stores, Amazon, Everand, Audiolo, Overdrive, African Books, Kobo, and Storytel. So if you want to access that book, you can go to those stores and then you can do what you can get that book. This is the first picture. Here. Yes, this one with a man standing. That's the picture of it. Yeah, in case you find it there, that's how it looks like. Yeah, it actually it has only this page which where there is a man. Yes, so in case you want to access it, you can go to Amazon. Um, I think the easiest site where you can find it Amazon, Apple Books, African Books, and also Storytel where you can access. But also all those sites you can find it there. Yes, and in case you want a copy, you can just a hard copy. You can also give me a call or email me, and then I do what, and then I bring you a hard copy. Yes. I've also just finished another one called Dream, Think, Achieve. It's also a personal development book whereby it prepares you to also to be purposeful in what in life. Almost they want to resemble in context, but they have different things. But all their personal development books, yes, that's my area of where I write, yeah. So I write about personal development, yes. So it's also a very nice book if you want to achieve your dream. How it prepares you how to achieve your dreams, how to connect with people, how to live in the community. Now, for example, uh, there is also understanding people because most times there are things we don't know. For example, it prepares you to understand yourself, to understand the family you're coming from, because the family where you're coming from, it gives you the basic foundation of your character, how you behave. It also prepares you also to get your principles so that you match them with the character or the what the family puts you in so you may mix those ingredients and you achieve your purpose. Yes, so it prepares you so that you may follow your dreams and follow your purpose. So, because many times we are in different families, but there are some things whereby which we miss that we want to connect to us or to we may have so that we may achieve our what our dreams. And most times you may find that to achieve our dreams, we have to first deal with the mindset. And sometimes we have different mindsets from due to the families we come from. So this book helps you to align with your family values and also maybe to reorganize them or to eliminate some which you see that they can't take you to your dreams. Yes, it helps you so that you may have your principles and have boundaries as a person and you achieve your dreams. Yes. I'm also a financial advisor at Britain. Uh, um, I've also done a course in marketing and branding. That's my area of work right now. That's where I do sales and marketing. Yeah, that's the reason you're seeing this training. You wouldn't have been seeing this, but because I'm sales in marketing. Yes, and also I've done a diploma in HR. That is human resource management. Yes. Thank you for being here. So let's continue. Today we are learning about investment. So what is investment? Investment are assets or items you put money into with expectation that they will grow in value or generate you income over a time. Yes, you use money now to try to make money to make more money later. So, which means that investment is whereby you have little money and then you try to make that money generate more money. So that's the investment. Yes, you that's investment. So you may decide to invest it in different things, business in actually in different things. Yeah. So common types of investment, we have stocks. What are stocks? Stocks is a buying piece of a company that can rise in value. So some companies they invite people and people buy portions, little portions of those companies, or they become partner. They support the company, so the company see that you have some pieces of. Now, for example, imagine like a pie, a big pie. There is a they bring many people who contribute to buy that pie, so they have a piece. They have a piece. Those are stocks. Yes, there's a bond lending money to the government or companies in exchange of interest. So you lend money to the government and then you expect some interest. Like in Luganda tukuita kuwola. Yes, owola government n'ofusuubiramu akasente akalala akakola ki akakomezebwawo. So that's what that's uh that's uh that's uh that's bonds. Those are bonds. uh then we go to real estate. Real estate is buying property to rent out or sell at a higher price. Yes. uh we go to mutual funds. So mutual funds, these are groups of investment managed together. So for example, you may be having a group, and then that group you decided to make it an investment group. Yeah. So that's what. Because many times many times these groups are nice. So if you have a like a group for club, maybe you go out for club, don't just leave that friendship there. You can persuade those people to become a investment group, and you develop each other instead of just going to spending time without anything productive. You may turn it into an investment club, since you are friends and you trust each other. Yes. Businesses, you may decide to invest in businesses, investing in a startup or your own company. Yes. Commodities like assets like gold, oil, and agriculture goods. Because sometimes you may, for example, there are some people who go and they get some portion of land and then they invest in that land and they put their people to do what, to farm there, and then they do what, they produce things, and then they produce crops, and then those crops are sold and they get money. Yes. Which investments? So from that, which you may want to decide which investment. Now, for example, here I've done a table whereby there is investment type, risk level, potential returns, and best the one best for, and then also the notes. These best for meaning which you may which type you may be best for you, according to your position or according to where you lie. Yes, and according to this type of investment. Yes, and also the notes. The notes. These are comments. Yeah. For example, stocks. Let's go through stocks. For example, stocks have risk. When we see on the risk, they have medium to high risk. Yes, and the potential returns are high. but also they are for best for long-term growth. Yes. So if you want short term, it may not work for you. Yes. And when we go to the notes, we have value can rise or fall quickly, which means its value can rise or fall quickly. So that's why you see that the risk is medium to high. So we go to bonds. On bonds, we have on the risk is low to medium. The potential returns also low to medium. So which means most sometimes the returns may be low or medium. Yes, according to also how uh, also how you're investing and all your courses also matters. Yes, also affects the what the returns. Yes, stability. Best for bonds are best for stability income. If you want your income, if you want something that is stable, so you go for bonds, because sometimes some have risk. The risks are high. Now, for example, if we see the one for stocks, sometimes they are high, sometimes they are risk. They are, I mean, sometimes they are low. So if you want stable, the one which won't affect you much, you go for bonds. Safer but slow growth. For the nose is safer but slow growth. So you have to be patient with it. And we normally see that everything that is good. For example, if you see wine, good wine takes long in breweries. You understand? It takes long. So the sweeter, the longer it takes. So that's when you're building wealth. Also, the longer you take, the foundation also will be strong. Because many times we want things which are come fast, but things which are come fast also may get destroyed faster because it has not developed you as a person, and you may not handle when it grows just speed. You may not have the ability to maintain it, but here you grow in the process and you know how to handle things, and you know each and everything in the business. Yes, mutual funds are low. When we go to the risk, they are low to medium, and also potential returns are also medium to low to high. Yes, this one is also suitable for beginners, and if you want to diversify. Yeah, for example, now for beginners, if you are in a group of, course, things won't affect you much like when you are in a single person. Yes, a notes combines many stocks, bonds into one investment. Yes, a real estate medium, the risks are medium, and the potential returns are also medium to high. Real estates, they are best for long term wealth and rental income. Now, for example, here we see that if you have rentals, it's also falls in. If you have houses where you rent, it also falls in real estate investment. Yeah, requires more money upfront, so it requires more money to start. Yeah, saving accounts, so you may decide to put in a saving accounts. Very low, that is risk. The risks are very low to low. Also, the potential returns are also very low to low, which are low. This is safe. This is safe. Best for safety and liquidity, which means they are safe. Good for emergency funds, not for growth. Because now here, almost what you're saving is what you're getting. So there's nothing. There is nothing. What there is no much difference. Yes, that's why we normally advise people to do what to do unit trust. Because sometimes you may just even if it's little, you will earn from it. But this saving accounts, the one you get, the one you, I mean, which you invest is what, of course, what you get. Yes. We go for, so why people invest? Why people invest? People invest to build wealth over time. Also, people invest to prepare for retirement. People also invest to earn passive income. Yes. To beat also inflation. Yes. Yes, people also invest to beat inflation. Now, for example, if the prices is normally comes down, so when you have not saved, when you have not invested, it may affect you. But if you have your saving, because sometimes it goes up and sometimes it goes down, you may find that for you, your when you're doing what when you have invested, for example, in a unit trust, it won't affect you much, and when it goes up it will be on your advantage, and maybe when it goes down it won't affect you much, because the other side, when it went up, it will just be balancing. Yeah. But when you don't have any investment, of course, as a person, when you have dry cash or just cash money, it will affect you and you will feel the weight of it. Yes, because the money won't be balancing. Yes. Investment investments based on goals. Now, we for example, if a person, you as a person, you may be having goals and you may be wanting to invest. So you invest according to your goals. For example, you may have the first one is short-term goals that they according to you, you may decide even the time period. But here I just put the one which, for example, which could guide you. Yes, for short term, and for short term goals, you may have that is 0 to 6 month, and medium term you may have from 6 months to 3 years or 5 years, according to how you want it, and long term, that is 5 years to above. Yes, that could be for retirement. So we go for short-term goals. Examples for short-term goals may side, for example, that is travel. You may be saving for travel or emergency fund or buying a small item. Yes, for so you save for that. For short-term, you save for that small item. High yield of saving account, short-term government bonds, and money market funds. These are the things you can, these are the programs you can engage with. Yes. So note, you need your money safe and accessible. So this is for when you need your money safe and accessible anytime. Yes. That's when you choose the one for short-term goals. Yes. So medium-term goals, example, buying a car, education fund, and this one, the best option you can take, that it's unit trust fund. Yeah, it will be good for you. Yes, according to what you want. Yes. And also the short term, there are some also, for us as Britain, we have also programs for short term. Yes, like the money market. Yes. So it depends on you, which direction and you want to take on. So the note, you want some growth but not too much risk. Yes. So that's when you take this midterm goals. Yeah. So long-term goals. For long-term goals, we have retirement, long-term wealth, that is building wealth. For example, the best options are stock market, real estate, and also unit trust. Yeah. So and normally you see houses. Houses are building houses. This falls in real estate. That is renting houses. Yeah, and also in unit trust. As you understand, the more you invest, the more you get from it. Yeah. Not long term equals more growth potential plus time to recover from market market dips. Yes. So simple beginner strategy. Now, if you are just beginning, this could help you because it has low stress and effective. If you are an unsure, or you are not sure where to start, many beginners use this approach. For example, for the first one, that is emergency fund. First, you may save 3 to 6 months of expenses kept in a saving account. You may decide to put emergency first and then you do saving. Yes. And then another one, you may For example, these are processes where which can help you. Yes, we have seen the first one is what you use emergency fund. Yes, you start with the emergency funds, which is for 3 to 6 months. That is for testing the waters and testing to see whether it will work. Yes. The second step is pay off high interest debts. Now, for example, here, if you want to invest, you first pay off your debts. Yes, you first pay off, because it won't make sense when you're investing and then you still have debts. Because maybe another thing what you can do, it is just you can invest while while you have while you're covering also debts, because these debts, some debts are growing. They have interest, so they will affect you in the long run. So what you have to do, it's better to have two accounts whereby you're trying to lay off the debts, and also you're trying to invest, and then the investment uh, catch up, because it is producing what? Producing interest. It helps you, and it catch up in the long run. Yes, or it helps you in the long run, and you get the interest, and then you start investing, and then you use the interest to lay off the what? The law of the debts. Yes. And then after some time the debts will be done, and then you're ready to you're now earning your interest. Or if not that, you may decide to do two accounts whereby you remove a certain percentage. Now, like here, 20% you pay off, and then maybe 10% you invest. Yes. And then investment regularly. Or you also have to be investing regularly, even small amounts, even if it's very, very small amounts, but when you're consistent. And this is called dollar cost averaging, and reduces risk over time. Yes, this is called dollar cost averaging, and it reduces risk over time, which means that it balances your money. That's where we saw that it beats inflation. Yes, because in here we use the dollar cost, because this system being they we just got them from developed countries. Now we are starting using them in Africa. Yes. uh, Simple beginners. If you For example, now here, if you want a personalized suggestion, for example, here there are some questions whereby you can ask yourself, and then you understand in which position you want to do what, to invest. For example, which time do you have? Is it short term? Is it medium? Is it long term? With the time horizon you want to invest. Yes. So this will determine which type of investment you will take. Your risk comfort. Yes, which risk can you bear also matters, because sometimes you may be having a lot of money, but you don't want to bear a lot of risk. Now, for example, going into real estate, now there the unit trust will work for you. Yes, because they are low risks. For example, your monthly budget for your investment, which percentage can you manage to remove on your salary to invest, also matters. Because if it's very small, and or if it's very high, also unit trust can favor you. Any specific goal you have, also the goals you have as a person also matters. Because sometimes you may be wanting to invest in houses. Also, sometimes you may be wanting liquid money, whereby you can just get your interest anytime, and anytime you want. Yes, and I can. So this is it. Maybe maybe if you want, like for example, if not, if you are as a person, as an individual, you want also someone to help you, guide you, you can also contact me. Yes. So after that we have finished that, but then I introduce you to as a company, the one we have Britam Investment, whereby we have the one. We have diversified financial investment programs. For example, we have the uh, the short-term investment program, the long-term, and also we have the retirement investment program. Yes, so you may decide which one you want. Yes. So this was our training. As I told you, we have these are the pictures of helping you to be on track. Now, for example, here we see a lady catching a poster to grow your money. Yes, and then we have this program, the unit trust, whereby the good thing with us, we have two 20,000. We have a program which is start with 20,000. So anytime you want, you feel like joining the program, or you want to invest, because normally you can't grow financially when you don't invest. So we normally see that if you want to grow financially, you have first take the first step of investing. So we have this program whereby it is the interest whereby it starts from 20,000. Yes, 20,000, and it's not it's flexible. Anytime you feel like putting your money, you can just you can just top up. Yeah, it is flexible, and it has no many terms and conditions which people fear to. Maybe they can take you to court. Maybe they refuse you to withdraw your money anytime. Maybe they will take off your interest. No, it is flexible, and it is a nice one. So in case you're interested, that this is my number. Yes. Uh, so these are some of the programs. Yes, we also have another one that starts from 100,000. Yes, we also have that one is a big one, which is for $1, whereby it's a dollar account. Yes, and we also have that one because normally the one for 100,000 and the one for 20,000, these are flexible. You can withdraw anytime. But there are some people who can't limit themselves, and they feel like if I know that I can access the money, then I can come at anytime I want. So we have also another account whereby you access your money within 3 months, 6 months, and 12 months. So after before this month end, you can't access your money. So you have to wait for this period of time to access your money. Yes. So that was our training. Also, we help you. We normally the other service we do, we remind you and help you so that you may keep on track on your goals. Because many times people who we deal with, they are people who have goals in life and they want to achieve those goals. They are normally the people we deal with. Yes, so we help them to invest, and so that they may see their dreams to life, or their goals come alive. Yes, and they reach their goals. So that's what we normal. Those are the people we normally deal with. Yes. So here we help you. We give you some trainings and some resources whereby you can help. They can guide you and they can help you so that you may achieve your goals and your dream. Yes. So thank you for being part of this training. Yeah. uh, we shall meet. So in case of anything, you can still do it, contact us.